What's going on, guys? Hope everyone's having a great day. We're going to look at the render chart today, and something interesting I noticed on mobile. I've been on the road most of the day, so I'm actually doing this off the cuff, but we're going to break down the chart. I did have a look at it before taking it along the other day, but if you look here on the daily, we're just looking at the perpetual futures chart, so it doesn't have all the data, but if you just take the most recent leg up and move down, you can see here it's moving in very clear waves up. So it's basically impulse, corrective wave, until it hits a top. And that top, basically it hit a high time frame target that I had. On the spot chart you would see it, but anyway, I've got the key level marked in over here. That was our first rejection on the left shoulder. And then you have a bit of a head here, and then you have a preemptive sell-off at this right here, which is more or less in the same zone, like right here. So that's basically where it's sold off over here. Now, what that did was formed equal highs right here, which means you have a liquidity pool in that zone where I've marked off on the chart. Now, if you look at the daily, there is no technical damage, meaning the major market structure is still valid. So you have higher low, higher high, higher low. Here you have your higher high. This is still a higher low. That's a lower high, so that could be a shift, but it's not guaranteed yet because this ended up being a higher low. Once this daily candle closes today, this would be a swing low, and then the bias would be up toward those equal highs. So technically, a lot of people might have been baited into a short, and if you were scalping or intraday, you would have made good money. But long term, on the higher time frame, as of now, it's not confirmed. It could just be basically reconsolidating here for another larger move up. Now, if you look at the equal highs and you zoom in on the 15-minute, what you could do is look at how long it consolidated in that range, basically when it started to form a top, confirming that high. So if we use the measuring tool from this candle right here, where the first impulse swing high was, to this one before the swing down, that's 25 hours. So it gave anyone 25 hours to get into the position in a range from here to here. That was about 5%. So to me, that's a little too long. Usually if that is, where we're going to start shifting market structure and breaking down, you're not going to have enough time to get in the position. It's just going to reject, maybe consolidate for a minute, and then whoop, down. Not literally a minute, but just like, not giving you too much time. So 25 hours is a long time. And to me, that's a signal that this is engineering liquidity in this range right here. Now, because we have a higher low here, we have a break of structure here, and we have a liquidity raid internally right here, bouncing off this order block, my bias is still to at least come up and take out these equal highs. And then if you look back here on the daily and the 12-hour, you basically have your last down candle. We'll use the daily. I just combined two candle bodies for that. But if you use the daily, we just use from the wick into the candle body. Your last down candle before a obvious order block formed. You could see there was a very strong displacement, an energetic push down that broke through that order block. So this is now our breaker. So if we do come up, the area where you could expect a bunch of resting offers are going to be in this zone right here. I'd imagine they're just stacked in this region. And the idea would be retail is going to be baited when it goes into the equal highs. Oh, quick, breakout. They're going to enter, they're going to mark it in like apes. And those dirty apes are marketing into big wallets offers that are going to start selling off. So that to me is the first target. And then if it reclaims that level, we go up higher. But in the interim, as long as you understand that daily high time frame market structure has not been violated, my bias is still at least to 239 up to the breaker, like 245, 250. Now, if you zoom in on the 1 hour, I'm obviously tracking a power of 3 that I posted earlier in this zone, where basically you have a consolidative range, then a flush or the manipulative move to take out this equal lows into a cluster over here, and then use the order block. I think it was a 12-hour. Yeah, so it's a 12-hour order block that broke market structure. So it's a perfect inducement setup where, you know, people are thinking these lows are going to hold. It's great place to enter on support. But what they're doing is offering up their liquidity in this zone and adding to the liquidity pool before a manipulative move. And this is what we call an inducement model, where it's a clear consolidative range, manipulation, and then basically reclaim the range and then start pushing up on the expansion leg of this power of 3. And then what you'd be targeting is essentially those equal highs that we marked in on the 4-hour, which would be the B on this harmonic. So you could see I'm using a hybrid style where I'm outlining the footprint of the market maker using smart money ideas, but I'm using the harmonic wave structure as my compass for where this target could max out. So my two major points of interest are going to be the B point here, which is likely going to reject right after you wick into there. So you're looking for an SFP. And then if you get a reclaim here, this would be your harmonic inversion of the midpoint. And then you could just, once it confirms and it maybe rebalances a low time frame imbalance, goes into an order block on the 15-minute or 1 hour, and then you could just enter and then take the long into D. So like here to here, and then you'll basically wait for that formation for an entry model. And then you can get a good 6-hour trade or whatever it is whenever it forms. But the idea that I'm focusing on here is on the 1 hour. The main thing I'm looking for is reclaimed levels. So if you zoom in, you could see this level here, 1, 2, that was support. Here tried to hold, and it did a minor liquidity raid, small weak move, and then broke down again. So that's the first reclaim level we're looking at. The second one is basically on the 15. You can see that level pinned here before push down, and it's kind of like a Wyckoff style model as well. But anyways, you want to reclaim that as your first level, and you could see, you know, a bit of a 1 hour order block formed in that zone right here, and then it reclaimed on the 15, pushed up into this key level where you could see rejected, support, breakdown, reject, reclaim. So because they did, participants didn't even wait for it to come back into that key level right where the pin bars are, that's a signal that you have an excitable, like, buyers are horny, they want to push this thing up. Now if you go back into the 1 hour, now because we've reclaimed these two levels, you're looking at the imbalances, right? So 4 hour, no imbalance here. Between these wicks, there's very minor gap in between. Either way, that was filled over there. So if we go in the 1 hour, you could see there's a very obvious gap. Here to here, that was your bearish imbalance, and that's what pushed down, and even up to there you still got that imbalance, which was taken back there. But just hold that thought for now. And on the flip side, so now you're on the buy side of the curve, you have this imbalance. You could see it held it right here, very strong. And now if you drag this original inversion out here, this original imbalance here, what you're looking for now is an inversion, meaning this bearish imbalance, they're looking to hold it and use this as a springboard up. So that's what we call inversion. So the way I size this up is you got the rejection here, right? So now you're in a tight zone. Your zone is essentially between here and this imbalance. This is your zone you want to see resolved. It's going to chop in here until it resolves. But the early clue, the buyers are excited to buy at this level and they believe that it's going higher, is they're holding this inversion here after rejecting this over here. So if the sentiment is poor, usually after you reject like this, you would expect more displacement down, you know? You wouldn't expect this imbalance to hold. And now you're just looking for it to break above this consolidative zone and invert this. If it does, then what I'm looking at is you have some buy side over there. You have all this internal range over here, all this internal range. You could create a liquidity arc. These are all open wicks that you could target to the upside. So as of now, it's pretty early, but so far so good. This consolidative zone is the key one to resolve. If you resolve that, then I think you could target very easily those equal highs at 239. And beyond that, I'm essentially looking at that harmonic where you have a very strong structure. The projection B to C was higher than the 1618, but again, I allow more tolerance because the remaining pivots look good. This is below the 618. This is around the 786, 886 closing here. That's, you know, 10 point tolerance over here is nothing, right? So anyway, that's the main target. From where we are now, I'm looking at essentially 37 to the main target and into the breaker 20%. Hopefully this makes sense. If you guys have questions about any of this shit, let me know in the main chat, and then I'll respond whenever you have questions.